Good afternoon. Assalamu alaikum, everybody. Welcome to this panel. Today we've got a very interesting discussion to be talking about. The theme of this conference, and I just want to make sure, can you guys hear me? Fantastic. All right, the theme of this conference has been about the future. And you cannot talk about the future without climate change and the impact of climate change and how it's impacting our day to day. We've seen it shift over the past 24 months at an unprecedented rate. C-suites are having it as an agenda item in almost every single strategy sessions that they're talking about. Governments, and as you well know, are committing to net zero targets. Companies are mobilizing towards this. And it's important that we take a step back and we have an opportunity this time around, because this time around we have hindsight. We know it's coming. We know it's coming our way. So we got to ask ourselves, as CEOs, as leaders, what are these disruptions? How does it translate to my business? How does it translate to our day-to-day, to our annual fiscal year, and to our P&L, and very importantly, to our people? What will my business look like 10 years from now? How will it shift? What do I need to plant today for my business to be successful 10 years from now? What are the trade-offs that I need to be aware of? What is the call to action today? With me for the next 50 minutes is an esteemed panel of individuals who will take us through this, and we'll have this discussion with them. Let me start on my right. Mr. Tony Cripps is the CEO of the Saudi Arabia British Bank. Thank you for being here, Tony.
Welcome.
Leena is the founder and the CEO of Symbaiosys. She is what I would call a grassroots pioneer in this topic. Katherine Garrett-Cox is the CEO of GIB Asset Management. Tom Deval is the Middle East managing partner for Bain & Company. And last but not least, Dr. Maryam Ficociello, did I say that right?
Yep.
Excellent, is the Chief Governance Officer at the Red Sea Development Company. Thank you guys for being here, and thank you for taking us through the next 50 minutes of your time. Tony, maybe I'll start with you.
Sure.
I mentioned this tremendous shift and this focus that's coming through on those three-letter acronyms that can mean many things, and we both know and we all know it can mean many things. And there's a lot of energy, both in the market and the way they perceive companies, and within your ranks. How do you, at SABB, focus this energy in your day-to-day? How do you make sure that this is a topic of conversation? And how do you make sure that it creates value for you and your clients?
Well, I'm glad you asked that question, because there's a table full of my staff right in front of me, so... No, seriously. So I arrived in the Kingdom about 18 months ago, and at G20, and then embedded in the vision for the Kingdom was an ESG component. But it's fair to say it was a statement without clarity of how you look at that journey and what it means for, as you said, businesses, including banks. So what you have to obviously do very firstly is articulate what it actually means for the business in real terms. So for us, if I look at our balance sheet today, our lending, we've got a balance sheet roughly of 200 billion or thereabouts. Less than 5% of the balance sheet currently is compliant in an ESG format. So the first thing is to think about how much of your balance sheet on the lending side, which is obviously going to help customers transition because they need finance to do that, what are you prepared to stand by in terms of that commitment? And we've said that we'll double that commitment over the next 2 or 3 years to 10%. Okay. But beyond that, we're looking at 25%. And that's us, and that's across the whole industry. So as a sector, in business terms, to simplify it, ESG's already the 10th largest sector in the global economy. And that is accelerating at a parabolic rate.
Right.
So as a bank, who has always financed energy transition for 150 years, it's our job to be able to do the same thing again on this journey into a more carbon neutral environment. So starting with the principle, and obviously the sponsorship of me as the CEO, because setting new strategy doesn't happen unless it comes from the top. And then putting resources in place, which we've done. We have an ESG office that reports on our progress, and they help coordinate businesses, the risk function, and all the other areas of the bank, technology, etc., on how we mobilise. And of course, on top of that, the importance of understanding what this actually means for the government in terms of the national strategy and how we connect to that. So I volunteered myself as soon as I arrived in the Kingdom to chair an ESG advisory council, which is working with SABB, the regulator, and that's been set up as well to look at products, taxonomy, regulation, and sort of a risk guidebook that helps people understand what this journey looks like.
And with SABB, I mean, you happen to be in the privileged position of needing to understand net zero, what does that mean, but also needing to funnel that, some sort of mechanism to funnel that into the corporates of this world. So with that in mind, maybe Dr. Maryam, I'll come to you for a second. Relatively, and there's a lot of new things in the Kingdom, but relatively, you are a new setup in the Kingdom. Your ambition is massive. What you're trying to do with the Red Sea Development Company is awe-inspiring, for the lack of a better word. And my question to you, in your position as a Chief Governance Officer, is how do you take these new ways of thinking on governance, new ways of thinking on how do you include principles of ESG, how did you set them up when you set them up, and how are you rolling them out?
Sure. So I'm glad that I'm speaking after SABB, because SABB is one of the banks that has lended us our first green real denominated green fund loan in Saudi earlier this year, actually. But I think we were in a very unique position, because even though we're only 5 years old, from the very beginning, our board was very clear, and of course it's the tone from the top, right? So our board was very clear that environment is very important for us, governance is very important for us, and that was a startup stage, but as soon as things started kicking in for the social, that also became very important to us. You've been referring to us as the Red Sea Development Company. You might have heard yesterday that we launched our new brand, so we're now Red Sea Global.
Red Sea Global.
And I think the important thing in that is that our slogan is for people, for planet. Okay. And I think that's important, because for people is the social side of ESG. For planet is the environmental side of ESG. And the governance piece comes in our transparency. We've been extremely transparent from day one in everything we're doing, including voluntarily reporting on our sustainability commitments since last year. So that's kind of been what we've been doing. I don't know if I answered your question.
You absolutely did. And I actually wanted to maybe come one step closer to me here with Tom. Tom, in what you do and in the advisory work that your firm does, you happen to be exposed to many sectors. And maybe you can give us a snippet about what are the challenges? Are they different across the many sectors? Are they the same? And you just need to translate them? What is it that you're seeing are challenging your clients nowadays?
Yeah, I think there's the answer is always it's a bit of both, because there's a lot of similarities in the end, and we've seen yesterday, I think, what was clearly put. One, it's a big challenge, and two, we don't have time. And so we have to go quick if we want to be net zero specifically, but there's a number of other climate challenges ahead of us. By 2050, we have to halve emissions by 2030, and 2030 is not that far away. So, at the same time, I think what you see across sectors is, wait a second, fine, we have to invest a lot in net zero, climate, and so on, but we are in a period of cost inflation. We are in a period of supply chain resilience issues and supply chain reliability challenges. We are in a period of big uncertainty, and therefore, how do we invest against horizon that is pretty uncertain? And so I think that the common theme is and Tony also hinted at is there needs to be an alignment regardless of the sector. I think there needs to be an alignment from the top, which is both the management but also the shareholders, that this is important and that this can be done in a way that enhances shareholder value, and I'm sure we'll come back to that to that concept later, but that in a way these agendas of dealing with all of the strategic challenges can be dealt with in a ESG friendly way rather than they are two separate agendas. And I think this debate is extremely important across sector. Then the solutions are obviously pretty different. I mean, if you are in Tony's business, 95% of your emissions are the ones you finance. It's not you who emit them. So the game is very different than if you are Aramco or if you are SABB. Right? So there's the solutions, I think, are very different, but the overall challenge that we're seeing is pretty similar across sectors.
Yeah, and this point about the balance between creation of shareholder value, which is corporate mandate, but also being a good corporate citizen as well, becomes this balance that people want to talk about and people want to understand a bit better. And Leena, maybe I'll pose this question to you. Shareholder equity. I'll just stop there and say, what do you think about it? And how do you advise the people that you talk to and some of the stuff that you do on a daily basis when it comes to thinking about that balance and driving that balance through? What goes through your mind, Leena?
Yeah, thank you. It's an amazing question. So Symbaiosys is a mission-driven business, a mission, not emissions. And in a way, the pandemic, or the silver lining of the pandemic for me, is that suddenly companies and governments really started to understand that this was a dress rehearsal for climate change. And one question that I love to ask boards is, if 5 years ago you knew with absolute certainty that the pandemic was coming, what would you have done differently? How would you have prepared? How would you have minimized your risks? How would you have leveraged possible opportunities? And the thing is, today, institutions have that foresight. The climate science is in our hands. We know the implications of a world that goes through a more than 1.5 degree temperature rise. And so we're able to make those decisions and have that foresight. Because not only will the implications be a disruption to business as usual, but it'll threaten the livability of this planet and our own survival as a human species. And I don't mean to sound so doom and gloom. I am an optimist. So I find that it's helpful to actually now reframe the way we relate to the natural world. So if nature were a tech startup, it would be worth more than all the unicorns combined. And in fact, the value of natural capital is worth double the human industrial economy. So the value of natural capital is upwards of $140 trillion. Meaning, if humans were to try and replicate all the things that nature gives us for free that we take for granted, like fresh water and pollination and storm protection and cooling, it would cost us $140 trillion or more to replicate that. Half of the world's GDP is either moderately or highly dependent on nature and therefore exposed to risks from nature loss. So really, if you reframe that, nature is our biggest social and economic partner. And for that partnership to endure, we need to have a fair trade agreement with nature. So if we think of, I'm not sure if it was Tony, but someone mentioned that ESG is going to be the top 10 sectors. Yeah. So global ESG assets under management by 2025 are going to reach $53 trillion. That's roughly a third of global assets under management. So there is a massive opportunity here to unlock shareholder value creation. And if I may as well, the good news is that investing in nature can give us that win-win. So investing in nature can generate market rate returns, things like sustainable forestry, regenerative agriculture, sea kelp forests, sustainable fisheries. These are things that generate returns from multiple revenue streams, not just carbon credits. Although those who are interested in carbon, actually the value of nature-based offsets is worth 4 times more than tech-based offsets. And it restores biodiversity, and it protects assets from physical climate risks. Mangroves act as a storm wall. So if you have physical assets at risk of sea level rise, tsunamis, coastal flooding, hurricanes, Wetlands support a fire-resistant moss that stops the spread of wildfires, and forests even divert certain earthquake waves from the Earth's surface and reduce the impact by the time it reaches urban areas. So for me, this shareholder value creation notion, it's really a no-brainer because the options are invest now and capitalize on this win-win, or don't invest and pay later.
Yeah. No, I think it's there's an element to that is not just dollar-based, right? And it's very important that we keep in mind that our long-term sustainability is based on that. Going back to the dollar base for 1 second, and I'm looking at you, Katherine. I mean, I know you manage assets, right? How do you look at your deployment? Do you have certain criteria that you say 10% of my deployment, something like Tony mentioned earlier? How do you judge returns versus not? When it comes to this shareholder equity question, how do you do it in your business?
So thank you, and it's a great question. And in fact, Leena's opening remarks are a great segue. Leena said it would be great to ask boards what they were doing 5 years ago, and if they had the foresight, what would they do differently? And I'm delighted to say that actually 5 years ago, we started this discussion with our board. And so to your point about the deployment of assets, at that juncture, we spent a long time thinking about the if you like, the balance of purpose and performance. So over the last 5 years, we've worked in a very single-minded way to have music in the room on the other side. Wow, that's loud. To design a set of investment products that tackle the greatest challenges that the world faces today, whether from a people or a planet perspective. And so under the Sustainable World banner, in both fixed income and equities, public markets, that's what we've been designing. And I think the key to all of this is you can't just do it on the side. So I'm somebody who almost struggling to talk over the music. Can you hear me at the back? Okay, I'm going to keep going. So as somebody who's spent more than 30 years in the investment industry, but probably 20 in ESG investment management, I think one of the things I just also wanted to point out is we forget that this is really new. So if you look at all of the research that people can talk about, studies, is there a linkage between ESG and strong financial performance? The reality is that since 2015, there is more research than predates every year prior to 2015. Yeah. And there are numerous studies. There are some great studies between Kellogg, HBS. You can look at collaborations, NYU Stern, and Rockefeller. And the reality is that there is categoric proof now that if you tackle these issues and you embed them into your business, it really makes a difference. But just the last point I would make, which actually comes back to something that Tom said. He said you've got to look at what management are doing and what shareholders are doing. I would also say boards have a big responsibility. Okay. Now, PwC, sorry to call out a competitor, have just put out a research piece which surveyed a very large number of US corporate board directors, and the frightening statistic is that only 11% of them said that it was important to have ESG competence on the board. So I think we as leaders who also sit on boards have a real responsibility to get more people crowded in, because without that, we're not going to scale the money, we're not going to get it to where it needed most to tackle all of the issues that Leena was speaking about. Yeah.
And speaking of the money, and maybe I'll come back to you, Tony, on this one. The setting of the ambitions, which is a government's job, the setting of the regulations that are consistent across the various companies so people can actually compare how corporates are doing. The setting of where we want to get to by when, in most simple of words, government's job. There's also this grassroots corporate setup that needs to happen, and it's fundamentally greased by the financing that comes through. Do you sit down and look at this and say, I'm going to lend X, and 10% of X is only going to be going towards green-based deployment? Or do you sit down and say, I'm going to work with company X and make sure that they do it this way? And those are two distinct things. Right. How does SABB think about that?
Right, so as I said, we've set objectives. in understanding how fast the transition is happening. It may accelerate, regulations may get more simple, maybe. They're still a bit uncertain if you look at the very long term. But so we pick a number like 10% and say, let's get there in the next 3 years. And then what we do is we look at all of our clients, not just individual sectors, and talk to them about their own challenge and how they see the risks to their business. And certain industries are at very high risk, and others are at the other end of that scale. And at that end, sometimes you get, well, I don't need to do this because I don't have a problem. And then you'll talk to them about the different risks, and one of them is brand. I mean, people think about it as carbon emissions, but if you just look at sustainability, that's not just carbon, and social responsibility. So brand is a part of the equation, as well as more complex issues like credit ratings, regulatory changes, etc., etc. So we look at the whole customer base, not just pick a target and go and pick, one company or two that will achieve the target. It's a much broader kind of initiative, and it's easy to start at an institutional level because there are incentives to issue capital in green form. It's demand, but also you can put in place risk and reward parameters which reduce the cost of funding, rewarding, increase the return to investors if you don't comply. So that part's kind of well understood, but getting the broad message and understanding into the middle market and the retail market is also something you need to work on to ensure that you're going to get the kind of success that we all want.
And do you feel that that awareness level from people who are seeking to be funded is there, or do you feel there needs to be a concerted effort? And maybe this is a question for anyone to pop in on.
Well, I just answer it first, if that's okay, but in some industries, intense awareness. If you're an oil producer, transition. But in other industries, less so. And it's just a function. I think it's our responsibility as a financing institution to make sure that even at low risk, people understand they need to be thinking about it because it's coming quickly.
Right. And you mentioned something else that was actually interesting, and there was this interesting article that came up in a publication that I think we all read a couple of weeks ago that had the words ESG on the front with the scissor cutting off the E. In your mind, Dr. Maryam, maybe I'll ask you first. Is E segregated from S&G, or is it ESG? Where do you see the future to that? You mentioned the word carbon, and we've talked about carbon abatement quite a bit already. Are they one and the same? Is it the same acronym, or should we be having that discussion that there's the carbon element of it, there's the environment element of it, and then there's the S&G element of it? Where are your thoughts on that?
Yeah, I think this is a very tricky question because depending on who you ask and how passionate they are, they're going to say the E is more important, the S is more important, or the G. I don't think any of them are more important than the other, but I think every company has to prioritize what's material to it and how are they going to actually demonstrate that they're doing well on these different elements.
Right.
And I think this reflects on the question you asked Leena and the comment Leena responded to too. It's no longer shareholder value. It's actually stakeholder capitalism and stakeholder equity that we're responding to, because we can't just say we need to increase the bottom line being profits on our balance sheet. That's, I think, we know from the investor community and from all the pressure we're getting from future investors and also from stakeholders, that there's a lot of other elements that are much more important. And there's a lot of pressure on us because of social media and all this activism that we also are fair to the environment and fair to the social side of what we're doing. So I can't say one is more important than the other. I think me being a governance person, I would always say governance has to be done right. If you don't get governance right, even if you try and do the environment piece right and the social piece right, it's very easy to go wrong because you don't have a way of measuring, you don't have a way of reporting, you don't have a way of holding people accountable, and that could create so much reputational damage, let alone if you're misreporting, and that's so easy as well because we don't have, unfortunately, very good reporting standards. So yeah, governance would come first, but they're all equally important.
Absolutely.
No, I was just going to build on what Maryam was saying, is that, I mean, I find it weird that we have ESG at all. Is it not simply just part of good risk management? I mean, it's unfortunate that I think it now has a label on it, which has become, actually in the last 2 months, vilified. Anybody who has sort of stepped the wrong side of the line, is now accused of greenwashing. And I think I really long for the day where this just becomes it should just be part of what we do. You shouldn't be putting a label on it. And I think just secondly, to the point about reporting and this fear of being called out, which, is I guess, a very live and present danger in the world of social media that we live in. But, the reality is that we are incredibly positive at GIB Asset Management about the number of companies we're investing in that are choosing to report, are choosing to set science-based targets. Over 3,900 companies globally are now doing that.
Yep.
However, what we're now seeing is more people are choosing to report, but they're not doing it publicly. So they're calculating it internally. And now I've been reading about this new phrase called green hushing, which is, which is where you are measuring everything that you should be measuring and keeping it in-house, but you're not going to talk about it in case you get called out for marginally stepping over the line. And I just think that's not progress.
And can I respond to
Absolutely,
that as well? Because I
go
think
ahead.
that's a real shame, because the first organization I co-founded was a sustainability consultancy, and we would always say to our clients, because they had this fear of reporting and then being called out, or setting an ambitious target and not being able to meet it. And actually, when you don't share the failures, you miss out on the opportunity for the learning. So no one is going to say, if you are just honest about the journey and the steps you took, and you share that failure or why you didn't meet those targets, that is actually enriching the space for other companies to avoid those mistakes, and for entire sectors and industries to accelerate their sustainability journey. So it's the same as when people do good or try to do good, not even companies, on social media, and then get called out because why are you supporting X cause, but then you didn't say anything about this other cause. And I think this shaming culture is actually really quite negative.
Yeah, just Akram, sorry if I'm blowing up your timing on this question, but to come back to the 2 points, I think first of all that it's important to set a target and then adjust as we go. Nevertheless, I think in the run-up to COP26, suddenly there was an explosion in people setting science-based target. I think with not really a plan behind of how they're going to get there, right? And so you see now the targets of 2020, 30% of companies missed them. Now this group has grown tremendously in terms of science-based targets. Most of the curves are steeper as we get into the latter years. So I think if we want to keep this credible, there is this challenge of saying, let's not just put a target, but how are we going to achieve that? How are we going to communicate about the failures, but also successes? To the point of ESG, personally, I believe so there is maybe a bit of an issue with the acronym and some of the controversy it's created. At the same time, if we do an energy transition, the E, that is not fair for all or not inclusive, then we're going to reverse a lot of progress of what we made in the past decades, right? If energy transition is going to come at the cost of certain emerging nations, if it's going to take away the livelihoods of certain people, that's not going to bring us anywhere. It's also going to stop the fact that this needs to be a global movement. So there is a bit of thinking around how do we kind of marry the inclusiveness with the transition and make sure that energy transition is not a US thing or a Europe thing, it's a global thing with very different dynamics. And the same could go for plastics, the same could go on a number of other topics that are linked to the environment. So.
Absolutely. There was a plenary session earlier today where there was a big discussion about the cost of power is a very different thing to think about when you're doing a transition if you're sitting in Europe versus if you're sitting in Saudi Arabia versus if you're sitting in Niger, where only 13% of the population actually have access to power. So do we transition at the cost of making that 13% even lower or not? Is a very, very tough debate where I think the S part comes into the equation. So I'm a true believer of no, they are one thing. But going back to your point, Katherine, I also think it's about doing the right thing. And if you do the right thing across your balance sheet, you should be in a good space. You started alluding to maturity, Tom, and I wanted to actually just put this question across the whole panel. Where do we sit, do you feel, in this region, on this maturity curve of understanding it? COP26, let's just say a big milestone in the world of this transition. 27 and 28 are here. Where do we sit on that maturity? And whoever wants to speak first, please just go ahead and do that.
I can go.
Go ahead, Dr. Maryam.
So I think the region is late to the game.
You do.
And I think we have to recognize that. But I think what's interesting is that we're fast. So the pace of change here is really interesting. I don't know of any region that has had the same pace of change. And I think that's what's exciting. We have also, we have a few things that really work out well for us, including young generation. So we have people backing us up, and we have a young generation to respond to us. Not only in Saudi. Saudi has 70% of the population is under the age of 30, believe it or not. But the whole region is actually full of youngsters who really care about sustainability. So there's that pressure, which is great. And yeah, I think we're late to the game, but I'm hoping that because the pace of change is quite fast compared to other places, we'll catch up.
Yep. Tom, you wanted to say something.
No, because I agree with the first part of your statement and also with the second part. I think there's a tremendous opportunity in front. If you think of the region, one, we have some of the biggest energy producers in the world. So how can we transition those? If we make that happen, I think it will resound everywhere. Second, if you look at, we are creating whole new cities.
Yep.
We are creating whole new manufacturing and supply chain ecosystems, and the opportunity of building them right from the start, I think, is quite an exciting one. And how can we think about that? We have probably the biggest and fastest growing pool of long-term capital providers in this region from a sovereign perspective, and so if we manage to pivot them to really put sustainable investing at the core, I think we have a huge opportunity. We are a logistics hub, including some of the most famous airlines. So I think if we rally now and kind of demonstrate the type of pace of change that we've seen the region can put in place over the past years on a number of other topics, if we can apply that as we build the future, I think we can accelerate and get ahead quite easily over a set of regions that are dealing with such a bunch of legacy assets that are very, very hard to shift.
So I was actually just going to completely make that point, which is I compare from the outside in. So I'm sitting in London, but I spend a lot of time here and have done over the past few years. And I would totally agree. The pace of change is something that I simply can hardly fathom. Every time I come back to the kingdom, something is new, different. It's bigger, it's better. In some ways, I think it's very similar to what we've been doing within our own company. So we set out to create a very sustainable boutique focused asset management company 5 years ago. And now we're at the point where we're really having great conversations with clients. But in the same way, we're not one of those huge behemoths that has to pivot a whole bunch of legacy assets, a whole group of conversations. That's proving very difficult, and that's exactly why we're having the controversies over greenwashing. When you look at the region here, as Tom said, new cities, new technologies. I mean, look at the sun. We're all roasting of heat, right? Solar. There is just huge opportunity here, whether it's vertical farming, whether it's healthcare, whether it's digital, and so as I said, from a different perspective, I'm hugely excited about the possibility and the investment potential that exists in this part of the world is phenomenal. And actually, with the rest of the world not looking that great, let's be honest, and everyone's pretty gloomy, the sun is truly shining on the kingdom.
Yeah, and I agree with that. It's one of the reasons I came to Saudi, was because it was so obvious that of any country on the planet that the investor world would want to participate in helping transition, it was Saudi. It was the biggest. And it was the easiest for the reasons that have been discussed, because A, not much had been done yet, and B, the ability to execute without legacy and with lots of open space, solar as an example. So, I mean, Red Sea World is totally powered by renewables, and the loan they took as part of CapEx was in green format. It was the first green loan in the kingdom. NEOM, which is obviously another giant giga project, is building a green hydrogen plant. It's a $6 billion infrastructure that the world is interested in helping finance because of what it's doing to create power for that city, which is the size of Belgium, and is going to be just quite a phenomenon.
Tom happens to be Belgian, so
There you go, Tom.
There we go.
It's a good size.
So what I'm gathering in a way is maturity and where you sit on the maturity curve doesn't really matter. Because what we have here
the upside.
is it's the ability to pioneer. It's the ability to test, and it's the ability to actually stalwart some of this work going forward.
I think the biggest shift I've noticed, and I agree with everything that's been said, is in the past, whenever we would bring up the environment, we would always hear, well, we just need to fix the economy first and then we'll get to the environment.
Yep.
And now I'm seeing leadership that actually realizes the two are not mutually exclusive, they're mutually reinforcing, and that's probably the thing that makes me the most optimistic.
Let's shift the conversation internal, right? There's boards, and what should boards talk about? You mentioned this earlier, Katherine. There's obviously the C-suites that you all sit on, and how you have these conversations in a constructive way as a C-suite. But there's also that other side of the funnel, right? The recruiting, the getting of talent, etc. Tom, maybe I'll start with you on this one. I mean, how does Bain do it? How important is it to Bain and Company from that angle? And then I'll jump around.
Yeah, maybe to start with the last part you mentioned, talent. I think right now, if you want to appeal to the world's best talent, if you don't have a view on sustainability, if you don't have a mission on sustainability, I think you're very easily passed over. This is what people are looking for. One, because it's what they're passionate about, but also they feel that if they're going to join a future-proof organization, it's better an organization that has a very clear agenda. And so, for example, if to the internal part, we are now deploying in all of our teams that are supporting clients a weekly active conversation that says where we only used to talk, not only, but primarily used to talk about what is the impact we are having, are we having the right results? We are actively saying in every team meeting every week, how sustainable are our results, right? If we look at, and not just the E, but also the S and the G, are our recommendations, are they powering growth, but are they powering sustainable growth? And so that's sustainable and inclusive growth. So that's one very important part. We've also rolled out a bunch of formal training. So we have now what we call the Further Academy, which is a partnership with a couple of leading academic institutions that train all our staff on not so much immediately, what can you do at your clients or the corporates that we work with tomorrow, but what's the big picture on climate out there? How do you keep that in mind as you develop solutions? And so I think creating that internal momentum culture and almost forcing the debate. I don't think the debate internally just comes by itself. People are passionate about it, but you have to put in place some mechanisms that get people to talk about it, get people to talk about it in the day-to-day, and puts it at the same level as talking about dollars.
Right. And how does it work in maybe the financial sector, both Katherine and Tony? I mean, is this something that is extremely important for you? And is this something that you spew in terms of how do you attract the right amount of talent across the organization?
I mean, it genuinely is across the organization. And actually echoing something that Maryam said earlier, it's really being driven very hard from the bottom up by our younger population. But it has to be equally driven from the top down. If you don't have the right tone for the top, if it feels like a nice sort of sticker on the front sort of cover of your annual report, it's not going to land. And I'm very struck when we recruit graduates, which we've just taken our most recent cohort into the organization. And when I sat down with them recently and asked them, well, why did they choose to join GIB in London? Because whilst we think we are small and mighty, we're perhaps not the biggest brand name out there. And one of the things that they said was that it really comes down to them feeling that their values and purpose aligns with what we're doing on a day-to-day basis. And I'm sure everyone on this panel doesn't get out of bed every day and think, oh, I hope I'm not going to make a difference. You want to make a difference. And I think in the very short time that we have on this earth, you have to inspire and, basically mobilize, but also equip the younger generation with the skills that they need, because at some point we're going to pass the baton on to them, and they better be certain that they're going to pick it up and run with it. So it's absolutely embedded in everything we do, whether it's training, recruitment, but at all levels. And we do a lot with our board. So they're quite bored on this topic, but now they're also experts, which is very helpful.
Tony, is it the same for you at SABB?
Yeah, it's the same. It's getting the diversity of voice, and that's young people and the whole spectrum. I mean, look, very quickly, when I was growing up as a kid in Australia, my father used to get through a packet of cigarettes or so on most car trips, and at the end he'd throw the packet out the window. And I remember the campaign that started in Australia, which was a Clean Up Australia campaign, and it came from the bottom up. You know, kids throughout the country started telling their parents not to throw things out of the car window. And then on top of that, there was a whole campaign about going out and cleaning up rubbish. So it's getting that bottom up as well as the top down. But the voice of youth is very powerful.
Leena, Dr. Meg, go
I
ahead.
can add something to that. For us in the Red Sea Global, our experience has been that we actually have been attracting a lot of young talent that want to work in industries that didn't exist before in Saudi. So we've had multiple iterations of our elite graduate program. Our last iteration, we had about 20 seats in it, and we got 20,000 applications. So the interest is huge. And we have other programs as well. I won't bore you with the list, but I think what's interesting is that I was speaking to one of the elites recently, and she told me she never imagined that she would find a job easily in a Saudi project in marine biology. She thought she would have to become an academic. But we're actually one of the biggest recruiters of marine biologists because we need them. We're on a seaside coastal development. There's a lot of work we're doing with the environment. We've made a commitment to be 30% net positive benefit to the environment. And unless we have all these environmentalists on board helping us measure and ensure that we're actually going in the right direction, we can't do it. So it's been really positive for us as well. And I'll just come back to a point I made earlier. People talk a lot about where should ESG sit, and I think traditionally, as some of you mentioned, it used to be middle management, bottom up, but I think it only does get the right attention when it's top down. And I'm very fortunate that I work in a company that it's been top down from the very beginning. We don't have ESG sitting in middle management. It's actually with the board. We don't have a committee that looks after it every now and then. It's with the board. It's on their agenda. They talk about it every single quarter. Our audit committee talks about it every single quarter. Risk management is on their, our risk management programs talk about every element of ESG as well, which is the way it should be, because then it's on the board agenda.
Fantastic. I'm getting the 2-minute mark, and the name of this session was How Do CEOs Accelerate the Transition? So maybe a tough question, but given the discussion we've had, I don't think it is. I'd like to hear one of them from each of you, if you don't mind, as we wrap them up. So there's CEOs in the audience, there's CEOs who are probably going to watch this later. What are the 5 tips from the 5 of you that you would say today you'd give advice to your colleague CEOs? Tony?
All right. Well, I think I said at the beginning, it has to be top down, and it has to be with achievable objectives, or actually objectives that seem unachievable in the beginning, so that you're pushing really impactful agendas around what you need to do. So when I arrived in the kingdom, one of the first things I did was went out into the desert. I noticed it was a bit dusty when I arrived, so I went out and we sponsored planting 10,000 trees. So I took my kids out into the desert, my wife, and we did our bit for the environment. Put it on LinkedIn, and someone came back and said, "Great start, but 10,000, are you serious?" And given the size of the issue, I went back to the office and said, "Why can't we plant 1 million?" And my staff shuffled their feet and looked around the room, and no one really knew what to say. And yesterday we announced that SABB is the largest sponsor of the planting of 1 million trees. We just signed an agreement yesterday. So I think you have to think big, and then you have to follow that through with action.
Yeah, so tip number 1, be bold.
Yeah.
Even if unachievable, but be bold.
Yeah.
Leena, what's your tip?
So if I may, I'm going to do 2 quick tips, but one tip to build on what Tony said is be bold, but also have accountability, because even if people are inspired and the CEO sets a vision at the top, if it's not part of your KPIs and your balanced scorecard, it won't be prioritized. And then the other thing I would say is rethink your relationship with nature and really think about reframing that as your biggest social and economic partner as a company.
Katherine?
So I know we're running short on time, so I would say be authentic, because you'll get called out if you're not, And also it's much more personally fulfilling. So in addition to my day job, I'm very fortunate to be supported by my board, and I sit on 2 climate change NGOs globally. And that means that I can bring information back in and I can share information back. So I hope it helps me be rather more authentic on the topic than some. So that's my tip.
Be authentic. Tom?
Gets harder as it gets down
Yes,
the line.
it does.
So
I
sorry.
think we took all of Dr. Maryam's, but yes.
I'll just say, make it everyone's agenda. And I think we've done well in the Red Sea because for the longest time I've known my behavioral competencies has sustainability in it. And I have to actually measure to what extent are my team and everyone's behavior against their sustainability as a behavioral competence, which I think is important, and that makes it everyone's agenda, from the janitor to the youngest employee to the board members. So I say make it everyone's agenda.
How about we end with you, Tom?
Yeah, I'll close. I'd say work with the ecosystem because this is really a point that you cannot solve by yourself. Most of your challenge, whether that's emission, whether that's other sustainability topics, is somewhere in your ecosystem, whether it's your supplier, whether it's your customers. And I think taking the full view and working with the key partners in your ecosystem to solve the issue end to end is really important. I think if we each look inside, we are never going to solve it, and you are not going to make the right progress against scope 1, 2, but especially also your scope 3 topic.
It's not a silo game. Where are my partners? Well, with that, Tony, Leena, Katherine, Tom, Dr. Maryam, thank you very much. I hope you guys enjoyed this session and you picked up at least 1 or 2 tips to walk away from. And again, thank you to the panel for this great discussion from my point of view.